Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Friday, March 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had May corn down 1.5 pennies at 462.5. May soybeans were down 2 3/4 at 1024.5, and May Chicago wheat was down 6 3/4 at 547.25. This morning, we had got February non-farm payroll data. They were up 151,000. That was less than expected. Estimates were closer to 170,000. Unemployment rate inched just a touch higher, up to 4.1%. Stock market currently down about 139 or so as we start the morning. Good morning, guys. We'll put a bow on the week. Certainly busy for everybody. A lot going on every day. I guess, what we know today, given yesterday, is that tariffs for Canadian and Mexico imports had been delayed till April 2nd. The administration had what was told to be a positive conversation with the president of Mexico. The agreement hinges upon adhering to the USMCA agreement that was previously enacted. So we'll have to keep a close eye on that. President Trump did make a statement that, things do need to change ahead of April 2nd because that's his final date. So we'll have to see how that changes between now and April 2nd. So I guess with that, guys, Justin, maybe just a few comments as we wrap up the week. I know markets have been whipsawing around, but we'll get some final closing thoughts for the week and then kick it around the room.
Yeah, not much different than what we've been talking about. Obviously, a lot of volatility. We were trading, 3 or 4 lower in corn, and then quickly popped to 10 or so higher on some of these, headlines with tariffs and so on. So, we're super focused right now on, crop insurance levels and, kind of hedging around that and, kind of fine tuning that for clients. So that's our main focus. And I'm sure it's the focus of, several different groups out there. So, we're the lows, or even right here to lower, we're kind of in the money on some of these really, premium Cadillac products. So I think you're going to see really high coverage levels, especially with the, new subsidy rates on ECO and things of that nature. So, yeah, I don't see a ton of, I'm really interested to see what the commitment of traders is going to say here. How much have the funds liquidated? What's the current position? Are we cleaned up? Is it less than we thought, more than we thought? All those kinds of things I think will be interesting to the market as we go over the weekend. Next week's kind of end of the week. Next week's the last time to pick your crop insurance. So I'd expect, a lot more conversations on this next week. But yeah, that's kind of how I sit. Obviously a lot of moving parts here. We talked about before the show. I think everybody's comparing, this time to the last time we had a, kind of a trade war, and what did the markets do then, and how close are we correlated to, to those times. So I don't think it's like I said before. I don't think this is the same. I think we're trading it like it is the same, but I think there's a lot of differences to the last time. See if I'm right or not, but I actually think there's some pretty good opportunities to do on this break. So that's kind of my take.
Yeah, very good. Ben, what's on your mind this morning?
A lot of volatility. Interesting to note that global corn and wheat values didn't really change on this big break. And, I think Justin's hit it. You see what the COT says. You can draw some conclusions, I think, from that. And again, conclusions with an asterisk, because we've had 3 major days of, big days since then. So I think you got to go back to just really shoring up your insurance, know where you sit, I think that is an exercise that is worth the hour or so that it takes to go through with your advisor, and the effect that it can have on your outlook and matrix. And be prepared in both directions. It's yesterday was as volatile of a day in the corn market as I've seen in a long time. And you think, well, it was up, and it was good and steady, but it was moving around early in the day pretty violently. And it's toying with some moving averages here in corn. And, you wonder at what point some of the algorithms that are trading moving averages might scale it back a little bit because of the volatility. But yesterday when we went through the 200, you could see we were trying to press it below the 200 day. And as soon as we got above it, the buying was extremely aggressive, and it was not waiting around. It was lifting offers, tremendous amount of volume once that happened. And then we got up and got through the 100-day. Same thing happened. And it was a pretty volatile trade. And this morning we're sitting between the 100 and the 200. So we'll see. I don't see a lot of reason why anyone would want to be short old crop corn on this break. And, I think soybeans are slowly starting to negate some global abundance. And I think that we got to look forward to what can happen if we wind up with 84 million acres of soybeans. I think that becomes maybe a really fun trade at some point in the next 3 or 4 months.
So Ben, don't you think like when you trade these levels multiple times that you're going to continue to have these air gaps in these ranges?
I do. When you trade it out, and those what maybe sometimes take months to build up in a working order book, whether it be on bids or offers. Once you trade through it, you've depleted a lot of the liquidity within that area. That's where we see a lot of times we'll see symmetric triangles where it'll go back and forth as the buyers and sellers push back against one another, and then eventually it'll break out and go in one direction. But you would immediately go to the fact that we've just taken out every bid on the way down for 70 cents in corn, right? And how fast have we been able to build a working order book back above the market? And how willing is a producer willing to reward a market on a 10 or 15, 20 cent bounce off the low? So I'm not saying that we can't go lower, but you would think that for now that if someone really felt like they had to buy it, like you saw yesterday, that there would be the path of least resistance seemed to be up. And there were heavy buyers below the 200-day moving average. And when they were done, it was, we rallied 20 cents off the lows from low to high yesterday. So you can create voids in here and gaps. And, then the momentum trader sniffs a trade out and they run it to that next place. And the interesting thing always about the 200-day, it seems like, is it will waffle people back and forth a few times before it ever really either resumes or starts a newer, longer-term trend. And if you look at the trade from the last 3 days, that's pretty evident.
Yeah, the 200-day was like the first thing I learned, from the old timers, right? Like that's the indicator of if you're in a bull market or bear market, where you are in relation to the 200-day. So
on that massive flush below it yesterday, they really, someone felt like it was worth taking a crack. And when it was over, there were people reaching and aggressively buying corn. And I was in a luxury position to watch it when it happened. And it's a trade that you don't really see on an everyday sort of environment. There were 5,000 lots that traded in corn on one price in one swoop. So it was a really aggressive. And you're looking around trying to figure out what came out. Is this news or is this technical or a combination of both? But the buying was tremendous from 56 up to pause at 64, 63, which is right at the 100-day. When that went, we got another slug of buying, and then we had a huge round of stops for like 6 cents up to low 70s, and then kind of settle back in. So I'm excited to see what can happen. I think it's worth noting that, if I was going to put a bow on it, I would say that a lot of this was mechanical liquidation. people fearing of the trade war, probably some panic selling. But you look around and global corn markets haven't changed. So
you also had some forced farmer selling too.
Yep.
I think on this break, right? Like rent checks are due, March 1st, I think kind of the clock was time bad for a lot of these farmers that had to sell.
Yeah, it's dominoes. And 2 weeks ago, we were talking about the grower has sold a tremendous amount of corn. And at that time, people in the industry were throwing around 70 to 80% priced. And I don't know what that number is, but I know that between 460 and 502, we sold a lot of corn. We know that first notice date typically brings a lot of pricing of corn. And then we're breaking, and to Justin's point, we've got to pay cash rents, we got to pay taxes, we got input bills due. We see more selling there. So I think unequivocally you can say that in the last 2.5 weeks, whatever that number was, whether it's 70 or 80 or whatever, it's less today. And we have roughly 6 months of the marketing year left. So
Justin, what's your take on just your gut tell you on farmer grain holdings at this point?
Oh man, it's a good question. I think a lot of corn was sold on the way up. Call it like in the 450, 460, 470 area. Probably not much in the $5 area, to be honest with you. I think a lot was sold before that. And then there was another chunk that was sold on this break because of the things I mentioned, going into farmer meetings, trying to free up some cash to make some payments. I think we're probably close to the end of that phase. I think the next chunk's gonna be really tough to free up personally. Old crop corn, Same with old crop beans. I think most of that's been sold. There's some, we'll call it lottery chips. There's some bins full of some stuff, but I don't, you always have the one farmer that's, either got 100% or 0%, but I'd say in general, a lot of it's been priced.
Oh, and you had as people were exiting, the processor's fairly well covered now through the first half of March. So their aggressive bid is it'll come back, and it may be in the Eastern Corn Belt, it may be by way of basis to begin with, but this early in the year, it's not likely, I don't think, that you're going to see cash levels ridiculously below what we saw in February at their best levels. So however that translates to 25 to 40 over basis in Ohio and Indiana processors, I think it's going to take those kinds of cash numbers to move the next big chunk of corn for last half March, April, and early May.
Now the river levels have gotten really low again, right?
Yep.
Mm-hmm.
So it's interesting with the kind of export book that we have on, like for corn specifically.
Well, we have a local, one of the larger commercials in the area. They're offering free DP. That's not something you typically see. And
this time of year.
Right? Yeah. So they need corn. That corn in particular will go out on rail. We're feeding a lot to the southeast and other points. So I think the Eastern Corn Belt, and again, it's really what I watch more than anything. I think that there's going to be a kind of a moment where people aren't going to believe the levels that they may have to pay to get corn, especially if we see any sort of wet April.
What do you guys think of planting intentions? Do you think this break is shaking up the acres? I've heard that. I've had this question from a couple of customers, and me and Dustin were meeting with a grower, and we kind of looked it up. Right, they do the survey this week and next week for the March 31st planting intentions. Obviously, just a flat price at break in corn. Obviously, the ratio is corrected somewhat in corn and beans. Obviously setting the higher crop insurance guarantee level. Maybe we secured some of those acres, but I don't know. My thought would be that, those real big corn acre numbers that we were all, who could put out the bigger corn acre number. It seemed like we were, back in beginning to end of February or middle of February, maybe. I think that's going to be hard to reach. I don't know if you guys agree, but
Yeah, I could argue that. I could argue that either way. I could argue that you get more corn acres because the crop insurance is higher, and people just buy up crop insurance and plant more. And I could argue it the other way. I mean, the other thing is, like, if we're scared of tariffs and all the reasons we broke, input costs have not come down at all, maybe have gone up, and so I think it's going to be really interesting to see how much money people have to do those kinds of things. If everything was super profitable, I think you'd be picking up a ton of corn acres. The fact that things are tight and negative margins for a lot of growers, I think is going to be what is going to be the interesting swing factor here when we get those numbers, personally.
Well, right. When you talk about costs too, right? Like we have all these meetings about crop insurance, and obviously some of these bigger levels of coverage, even though they might look really great because of the price action, there's still a big cost to them, right? Yep. And that's a big pushback from our growers. Like, man, it's just so expensive. The mentality, it seems like when prices are low, you get pressure not only from your partners but your banker to cut cost.
Yep. You have two. I would say to that point, you have two extremes right now. You have growers that are ramping up crop insurance and doing different hedging things, and you have growers that are cutting back crop insurance, which I think is a huge mistake. But those are that is the very polar opposites. Because I think when there's like, hey, I need to cut costs, it's like I just need to cut across the board and not be strategic about it. Crop insurance is definitely not the area to do it, in my opinion. But you're seeing that, right? So
your cost would, essentially go down just by not picking up those extra corn acres, right?
Yeah, right. Yep. Yeah, this will be an interesting test case for sure.
Well, one caveat to that too, though, we talk about, these Cadillac policies still, though, like with volatilities and the way that they're coming at, I mean, they're still less expensive than they would be in a typical year, so that
it's the best value crop insurance has been in a long time.
Right.
Now, it's kind of like, when you make fun of like, hey, buy the dip, like with what money? Like, when you're tight, you're tight. But if you're going to spend money, I would say the higher subsidized, higher levels of crop insurance is the best value it's been in maybe forever. So
that's good stuff.
Could be interesting.
So what'd you get, Jace? What were the acres going to be?
Yeah. What'd I get?
I think 100 million of each. Yeah.
Well, I think the 95 million corn acre number might be a little bit of a pipe dream for this report coming up. So I think it's going to be a friendly corn number. That's my gut feeling.
A friendly corn number meaning so
a friendly corn acre number. Maybe a 90. I mean, I don't know the number, but the range is 92 to 95 or whatever. I'm guessing it's towards the lower end. Be my thought.
Getting some good comments here. Chris comes to us this morning just sharing, sold pretty much everything but one last load in the last 2 or 3 weeks. Basis was 5 under nearby, even out in the back months. Now today we're 10 under up front and 5 for next month, 0 past that. Kyle's going for 94 million. I'm going to remember that, Kyle. Maybe we'll have a little side action on that deal.
All right.
And I do agree, Kyle. Cheapest hedge you can buy right now is insurance. That's a pretty accurate statement. So very good stuff. Thanks for participating. Got a minute here, Ryland, real quick before we wrap. Let's move to livestock real quick. Little cash trade, softer in the cattle yesterday. And feels like hogs certainly appreciated the tariff news. We had a pretty good rally late in the day there on hogs. So why don't you put a wrap for us?
Yeah, it really does feel like the tariff news is kind of the driver right now, just like we've been talking about. So now with those getting pushed to April, definitely. I mean, hogs, clearly like to hear that, I think, overall. And on the feeder side of things and the cattle side of things, maybe didn't want to hear that, So it looked like we did see a little bit of liquidation overall in the feeders. They're down about 1540 in commitment yesterday. So I think that's something to be cognizant of. I mean, if the tariffs aren't here, what's that going to do? I think there's a big justification for the long side of the market here to to stick around based on that these are coming out in April. So I don't think it's going to be a heavy kind of, just get me out kind of situation. But the anticipation is for them to still to go on in a month. So I guess here we are. But yeah, we saw a little bit of cash trade, steady-ish maybe. So things are kind of perking up a little bit on the live cattle side. So, overall, we've seen the beef market start to trade in more mixed fashion. So it does feel like you're getting a little bit more optimism kind of going into next week. Cash being 196, 197. The North still has to kind of post trade. So we'll be watching that. And there was an eight pound drop in steer weights. So a lot of that is likely weather related, but overall, I think the market's going to see that as relatively friendly just at this stage of the game. So I think you got a little bit more optimism going into next week, a little bit of pressure off on the headlines now that things look like they're just going to be kind of back and forth for the next month or so. And on the hog side of things, same thing. We saw some short covering yesterday. Obviously, the tariff news was good for everybody. And, cash market has been kind of creeping up here as well. So I think we're seeing that support just kind of stick around in the front end of the market. But overall, it's going to be a whipsaw kind of headline trade for the hogs right now with the focus on Canada and Mexico. So we'll see if anything comes about that. But generally, it feels like you got some stability on cash, a little bit of stability in cutout. So overall, I think once again, you got a little bit of optimism kind of going into the weekend.
Very good. Well, we made it, guys, another week. And that brings us to everybody's favorite segment of the week. It's Brian's Fun Fact Friday. What do you got for us, buddy?
Thanks, Dan. Happy Friday, everybody. We made it. No really theme for this week, just a bunch of crazy fun facts that came across last night. Let's kick it off with donkeys kill more people annually than plane crashes.
That's good to know.
Wow. Ryland, stay away. Yeah, Ryland, I would say stay away from the petting zoos for you. So
good,
to keep
call.
you
He's banned from petting zoos. He's banned.
Lamb's Farm off limits. There are more than 150 million sheep in Australia compared to only 17 million people. So that's a lot of mutton to eat there. The microwave was invented by a researcher who walked by a radar tube and the chocolate bar melted in his pocket. A duck's quack has no echo, and a pig cannot look up to the sky. So very interesting there. So we'll just kind of move over to the a lot of talk about tariffs with U.S., Canada, Mexico, and China. Here's a few fun facts about each country, starting with the United States. I did not know this, but on the back of the $5 bill, every state is listed on the top of the Lincoln Memorial. So I might be the only one that didn't know that, but I did look through my camera, and it does show that.
Oh, they might have to change that at Canada. Yeah.
That's for a different show there, Jay. Yeah. That's for a different show.
The average American will spend 6 months sitting at a red light. In China, if the population of China walked by you single file, it would never end because of the rate of reproduction. Now, we might have to fact check that, but that was a pretty crazy stat there. Yeah. Mexico has more pyramids than Egypt. And lastly, I thought this was a good one with Canada. It is prohibited by law for dwarfs to hunt moose on Sundays. So there you go. All right. Have a great weekend, everybody. Have a great weekend.
It's a good law.
Just dwarfs or all people?
All I saw was dwarfs. So
just
Dwarves.
Oh, that's so many questions.
Yep.
We're gonna
Happy Friday.
About this.
Good law.
All right. Well, there you go. We appreciate everybody that tunes in. Jack's got more information in the outro, but we are certainly with a couple weeks here to go. Well, really just a week left to make your crop insurance decisions. Give us a call if you got questions, want to go through that, how it relates to marketing, and a lot of the things we've been discussing here for the last couple months or so. Give us a shout. Love to visit with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly give us a subscribe there. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield, and certainly keep you up to speed on Fun Fact Friday, which everybody enjoys. We're coming into we came into the open here. Let's get a quick readout. May corn up a half, 464.5. Let's see, May beans are down 5 at 10.22 1/4, and May Chicago wheat is down 6 3/4. We're streaming live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a great show. Hope everybody has a great weekend, and we'll see you again on Monday.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.